In continuation of above video, the sources of capital, now we are going to see what is lease financing in brief. Lease financing is one of the important sources of medium and long-term financing. The owner of an asset gives another person the right to use that asset against periodical payments. The owner of the asset is known as the lessor and the user is called the leasee. Lessor and leasee. The lease financing is very important in medium and long term financing. The merits of lease financing are it enables the leasee to acquire the asset with a lower investment. Simple documentation makes it easier to finance assets. Lease rental paid by the leasee are deductible for computing taxable profits. It provides finance without diluting the ownership or control of a business. These are the some merits of lease financing. The limitations or demerits of lease financing are a lease arrangements may impose certain restrictions on the use of assets. The normal business operation may be affected in case the lease finance is not renewed. It may result in higher payout obligation in case the equipment is not found useful and the leasee opts for premature termination of the lease agreement. Next comes the public deposits. Public deposits is very useful for, and it is also referred as a unsecured deposits which are invited by companies from the public mainly to finance working capital needs. A company wishing to invite public deposits makes an advertisement in the newspapers. Any member of the public can fill up the prescribed form and deposit the money with the company. The company return issues a deposit receipt. This receipt is an acknowledgement of debt by the company. The terms and the conditions of the deposits are printed on the back of the receipt. The rate of interest on public deposits depends on the period of deposits and reputation of the company. The merits of public deposits are the procedure of obtaining deposits is simple and does not contain restrictive conditions as are generally there in loan agreements. Public deposits do not usually create any charge on the assets of the company. The assets can be used as a security for raising loans from other sources. Limitation. New companies generally find it difficult to raise funds through public deposits. It is an unreliable source of finance as the public may not respond when the company needs money. Collection of public deposits may prove difficult, particularly when the size of deposit is required in a large scale. Next is the commercial paper. Commercial paper is or also called as CP is defined as a short-term unsecured money market instrument which is issued as a promissory note by big corporations having excellent credit ratings. The merits of the commercial papers are a commercial paper is sold on an unsecured basis. It is a freely transferable instrument and it has high liquidity. It provides more funds compared to other sources. Companies can park their excess funds in commercial paper, thereby earning some good returns on the same. But it also has some limitations like only financially sound and highly rated firms can raise money through commercial papers. The size of the company is raised. Thank